Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started. Good morning. Today is Wednesday, August 18th, 2010. Apologies for missing the video yesterday. I had a little bit of a tech issue here, but we're back today and we're looking at the market. And this morning, the big news overnight was that the minutes from the Bank of England and the UK policy, monetary policy meeting were released, and it had a decidedly hawkish tone. Now we'll take a look here on the chart and you can see what happened in the meeting. Okay, right when the minutes were released, pound dollar here held 155 support. Looks like it got higher. Didn't quite get to 157. It's pulling back a little bit here. We're going to have to see if dollar weakness today flips around to dollar strength. Start of the U.S. stock markets are open. They're lower today after rallying yesterday. So it could be more of a technical pullback than an actual change in sentiment. We've been seeing some decent corporate earnings recently. This morning we got good earnings from John Deere and Target. So this could be more of a technical pullback, which could just mean a pause in the market, but that could induce a little bit of risk aversion. So anyway, back to the Bank of England. They came out with their meeting, and the lone dissenter in the meeting, policymaker Andrew Sentence, has been calling for rate hikes, immediate rate hikes, for the last couple of meetings. He's the lone dissenter, but the policy makers there, they were surprised by recent UK economic strength. They've still got inflation, which is outside the government target of 3%. So if this doesn't come back in with the next quarter, they may need to do something with rates there. So that's why the pound took off earlier this morning. Today's a very light day for news. I just want to show you a couple other things here. We've got the Aussie lower. Okay, you can see started the morning. Let me scroll it back for you. 5 minute came down in, and then went a little higher. Now it's pulling back a little bit. The Westpac index of leading indicators came in, and it declined for the third straight month, showing that economic growth may be slowing over in Australia, which for the Aussies is probably a good thing. They don't want to encourage bubbles. They have high interest rates, but they don't want to have their currency too high because they are a nation that exports a lot, particularly commodities and raw materials. So they're looking to slow the economy a little bit. Not a bad thing. The other thing I want to take a look at is look at Euro USD. Okay, you can see just got up to about 129.20 earlier. Let's look at this on, say, a 30-minute chart just to see where we are. And that looks to be like we're trading in a little bit of a range here, 128, maybe 129 with a slightly higher bias. Now, there's some talk going on over in Europe about German economic strength. And George Soros is a guy who came out and he said, that Germany's economic path is unsustainable, that they export too much, they don't have enough domestic demand, and it's going to lead to problems down the road. Well, I think right now that's falling on deaf ears because German economic strength is really the only thing holding the euro higher. Now, I talked a little while back about what is Germany. That's C-H-E-R-M-A-N-Y, Germany, and it's the idea of putting China and Germany together, as they are the two largest industrial production and exporting nations. Now, China, we know, has an unfair advantage because they peg their yuan to the U.S. dollar. That keeps their currency low. That makes their exports attractive. But Germany also experiences a little bit of that as well because of their inclusion in the EU. All right. So if Germany had its own currency, if it went back to Deutschmark, chances are it would be a lot higher than the euro. But because you have all these other Eurozone countries that are pretty weak economically, that holds the euro lower, which sort of gives them an unfair advantage. Not necessarily unfair, but that's sort of what's happened in Germany. So there's some calls for them to change policy as well. We'll see what happens with that. So that's the euro. Lastly, I just want to look at pound yen here, or excuse me, dollar yen. All right, we're sitting right around 85. Let's look at this on the 4-hour chart. You can see here 85, sort of that line in the sand we talked about, but now there's increased speculation that they're not going to intervene in the currency. There was a policymaker or lawmaker who came out and said that they should intervene immediately and that this should be all the way up at 95. We can't even see it on the chart here, but 95 yen to the dollar, and that doesn't look like it's going to happen right now. So just looking at this chart here, it looks like starting to expand a little bit. We could be in for the break here of 85, which means that the next logical place down would be around 80. We'll see if that happens. But the Japanese economy is still weak. They're led by exports and stronger yen. that makes it harder for them to export. So that's sort of what we're looking at today. Today is a day where, without the news, we're just sort of following the money. Aussie's being sold. We've got the Kiwi picking up the slack there, so people are shifting out of the Aussie, moving into Kiwi. You can see here, this is the biggest gainer right here. That's Aussie Kiwi. Okay, you can see it just had a nice march higher. Now it's selling off a little bit. We've got the risk aversion picking up here. Let me see, U.S. stocks are actually down around 60 points down, so we may in fact give back all yesterday's rally. So we'll have to see how this ends up. But just following the money today. Moving, folks moving towards pound. Although, look, pound flipped over there, coming back a little bit. So we'll have to see how this thing holds up. But by and large, there is no real news here moving the day. So this is probably based more on stock market correlation than anything. So that's what I've got for you this morning. Good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.